Hello traders, welcome to Visit Package Deal. My name is Damien Castilla and I'm here to talk to you about the three components that in my opinion will lead you towards being a consistently profitable trader or a professional trader. Whatever your goals in trading are, if you don't have these three components or these three pillars, okay, then you will not achieve longevity in this business. Your success will be limited, your gains will be short-lived, and ultimately you will not be successful. There is always an exception, like to everything else, but those exceptions are more in the 1 percentile versus the 10 to 15 percentile. There's a high failure rate in this business because traders have not understood that it takes these three components to make you, okay, a full package trader or the real deal trader. Okay, and most educating systems out there fall short in delivering on this message. Why? Because they are not real traders. Why? Because they don't understand trading. Why? Because they just don't know how to present the information in a way that it makes sense. Okay, and the hardest part to teach is a trading state. Okay, now I'm going to keep this in this little presentation short and sweet because I don't want to overwhelm you with information. Okay, but subsequent to this video, we're going to be expanding on the three pillars. I'm going to make three independent videos on each one of these components to then dive deeper into them so that you can understand them in a profound way. What I don't want to do is put it all into one video and this turns into a 1.5 hour presentation and then I lose some of you in the process. I don't want that, so we're going to keep it short and sweet here, kind of like the main idea, kind of show you guys why there's three pillars and how they work with each other, and then in the separate videos we're going to dive deeper into each one of these components. Okay, so those three components are the three pillars to consistent profits. One cannot exist without the other. One is a trading strategy, second is money management, and third is the trading state. And to bring that point home, I'm going to show you how these three work together. Number one, a trading strategy, right? We cannot or should not interact with the market without a strategy, right? These strategies are going to be profitable sometimes, not so profitable at other times, get stuck in the mud at other times, depending on what order flow or depending on what you're looking to capture within that strategy. That's what money management helps you stay efficient, right? To grow your account in the most efficient way possible, to recover from that drawdown in the most efficient way possible. But number one and number two do you no good if number three is not there, because number three won't allow you to, if you don't have number three in place and in check, then number one and number two are useless because you're not going to be able to execute when you need to. Okay, and emotions are going to be in control of your trading, which means you have no trading strategy, you have no trade plan, you have no money management strategy, and you're gambling. Okay, and you know, for an emotion that's as strong as fear that overcomes us sometimes, fear leads to gambling. It's pretty ironic how it is so difficult to stay disciplined when you know what works and you know what doesn't, but we constantly feed that fear and start doing the things that don't work. It's mind-blowing how that happens, but that's because we don't understand the importance of these three pillars and how they work together. My goal is to demystify this, bring it to the forefront of your mind, and to help you gain mastery over your craft, mastery over what you're trying to achieve from trading. Okay, and I think very few programs out there, not that I have a program because I don't charge anyone anything, but this is the lesson that's probably the most important that any course could deliver, but yet almost every single course out there falls short. I'm sure there are very good courses out there that do talk about these things, but from my experience, the majority do not, and if they do, they superficially brush it just to say they covered it, but it made no sense whatsoever. Okay, let's move on. Trading strategy. Okay, a successful trader has a trading strategy that has a positive expectancy and provides an edge. Okay, so what we're looking to do here with a trading strategy is to, isolate an event or a situation in the price chart that tends to repeat itself, something that you can see that has a tendency to repeat itself. That is what we're looking to capture in a trading strategy. Okay, that is the foundation of your trading strategy. What am I looking to capture? Is it momentum? Is it a breakout? Is it a harmonic pattern? Is it a trend breakout or trend line break? Whatever it is something that should repeat itself as often as possible. Okay, so you can have some frequency. Okay, that is the very first step that you look for towards a trading strategy, because that's what's going to give you the edge. Okay, now we achieve this by accomplishing a thorough and proper back testing. Now, I'm not going to sit here and tell you that back testing has to be done for 2 years, 6 years, 3 months, 2 months. You need to do it goes far enough backwards so that you can see that the strategy that you're looking to put together has a reoccurrence often enough to give you the edge that you're looking for. Okay, so if that's 2 days or if that's 6 years, and that's what it has to be. Depending on what you're looking to capture, you may have to go back further in time, or if it's something that happens so frequently that you don't have to go back that far in time, then that's fine too. But you have to go you have to go back far enough until you can get that concrete information that tells you, yes, this situation occurs often enough for me to try to capture it, and it repeats itself often enough so that I can reproduce it. Okay, and then your trading strategy ultimately becomes your trade plan. Okay, there are elements to your trade plan that are very important. Okay, and we're going to dive into those right now, and eventually when I make that trading strategy video, we'll take my trade plan, break it apart, and show you these different elements. Okay, they are very important. Okay, one is a strategy name. You have to give your strategy a name. Okay, remember, we're trying to build a trade plan, which ultimately will be your business plan. Your business plan has to have, or your business model, I should say, should have a name, right? So give your strategy a name. Okay, start giving it its own identity, its own personality. Okay, because you're going to be relying very heavily on the strategy, okay, to execute in the market and ultimately become profitable. Okay, so you have to treat this with what? Respect. You have to treat this with what? Importance. And you have to do a good job with this trade plan, because if you don't, then your results are not going to be anything that you can achieve, right? And you also need to build a belief system around your trade plan. So it is critical that you have a solid trade plan, because that's going to help you later on with your trading state. Okay, your trading philosophy. Okay, what is your strategy capture? Okay, you've given it a name, now you got to give it a personality. What does it look to capture? Are you a momentum seeker? Are you an order flow trader? Are you a price action trader? Are you looking to capture breakouts? Are you looking to, whatever it is that you're looking to capture, whatever philosophy it is that you're looking to capture, you should identify it in writing in your trade plan. Okay, very important. Okay, a mission statement. A mission statement is important because it gives you a sense of purpose, a sense of drive. It's what you're looking to achieve. Now, my mission statement happens to be my holy grail statement. Okay, because I believe that the most important element to my trading is not my trade plan, is not my money management, but my trading state is my most important element of my trading. So because of that, my mission statement is a statement revolving around what? Emotional control, trading state. My holy grail statement achieves that, and that is my mission statement. Okay, you then should go to your settings. Okay, identify your settings. Okay, your chart settings. What colors do you use? What time frame do you use? What tick interval do you use? Your fib ratios. What ratios do you use? What extensions do you use, if any? Whatever elements you're using, or whatever tools you're using in your strategy, that's where you identify them in the settings. Okay, it's important because it's a visual representation of something that is now more tangible. And if you ever get wiped out, your computer or whatever, you need to redo it. It's right there, it's available, you don't have to think about it. it's there. Okay, and it also keeps you a little more accountable to wanting to make changes. Okay, when you want to have a need or an urge or an itch to make a change, you need to consult your trade plan. Okay, and then you need to ask yourself, why am I looking to make this change? What does my trade plan say to do or act or not do? And then that should help you sort out whether that need or want or itch to make a change is more of an emotional response to an outcome that you had in a trade, or something that you can take to your trade plan and say, yes, I want to make this change because I can see that this, when I compare it to my rules, has been more profitable than not. So therefore, I need to amend this. I need to make this change. But never make a change based on an itch or a need or a want if you haven't validated into your trade plan. How does it fit into your trade plan? How does my trade plan address this? Okay, and that's the importance of having a trade plan, is because now you can see whether your itch or your want or your need is an emotion or something real based on facts. Okay, process elements are very important. What are your steps? Okay, you can develop a little checklist, or you can just write out a process. I first identify structure, support, and resistance. I then do structure analysis. I then do order flow analysis. Describe what is order flow analysis. Describe what is structure analysis. Your process elements are how you do your pre-market or intra intra-session assessments of how you're looking for trades. Okay, this should be very clear and very spelled out, so that you know when you're going rogue. So when you come back, okay, and you do your post-session review and you review what you did versus your trade plan, and you can see where you're falling short, what areas you're skipping that are maybe leading you towards an outcome that is not favorable. Okay, what corners are you cutting that is affecting your profitability? Okay, so I mean, be detailed enough when you're falling off your horse, but don't be so detailed that it becomes overwhelming and daunting. Okay, you can keep it as simple as outline form, or you can keep an outline form and then go into the subsection of like structure analysis, and give a 2 or 3 sentences of what structure analysis is to you and how you achieve that. That's important. Okay, rules for every aspect of your decision making. Okay, this can become very, very complicated. Okay, it is also probably impractical and not advisable to have rules on every specific one. Okay, but if you tell yourself that you're going to get to a break even when this happens, that's what needs to be in there. Now, if you have different conditions under which you get to a break even, you want to also kind of understand that, because you need to understand whether you're following your own break even processes. Try not to have 5 or 6 different ways to get to a break even. Have 1 or 2 at the most. Okay, and that goes for all your rules. Okay, you can end up with 1,000 rules because there's 1,000 ways to skin a cat. At the end of the day, we're looking to keep it simple and keep it consistent. Okay, have 1 or 2 rules, 1 preferably, 2 max, that cover pretty much the same topic. Okay, give yourself an alternate just in case some areas may need that. Okay, an alternate way to take profit, an alternate way to trail. What I mean by that is, okay, if you've got a 10-point swing or a 20-point swing because the order flow is 10 points or 20 points, you don't need to make a different type of trailing type of situation, right? But if you have a 100-point swing, which is what we're using nowadays, you can give yourself an alternate way to capture some of that profit to not end up 80 points up and then on a break even, right? Kind of like we have been doing in the last few live streams, where if we do make a new structure high but we don't get a trail and price does come back to the 38%, we can lock in behind that. Okay, this gives us an opportunity to capture those points as opposed to giving it back. But it makes no sense to do that if you got a 10 or 20 point swing, right? What are you really doing? You're just giving your trade even less room to work. Okay, so give yourself some options, but don't overwhelm yourself with a bunch of rules that all of a sudden it becomes difficult to figure out which one you need to follow. Okay, err on the side of keeping it simple and keeping it concise, so that it becomes easier to emotionally manage your trades, okay, and to manage and to emotionally execute on your rules. And an optional area of your trade plan that is good for a lot of people, because it helps with that belief system, is some positive affirmations. okay? Or to write down your goals or your why. Why are you doing this? Why is this so important for you? Because that was going to help you in those periods when the pain is overwhelming your ability to keep that belief system up. Remember, you've tested this trade plan. It became consistently profitable, had a positive expectation. You validated that. That should help with the belief system. Okay, and your affirmations are going to help you when the morale is low. It's going to help you. This is why I'm doing it. This is my why. It could be a picture of your family on a yacht. It could be that house you always wanted. It could be that trip you always wanted to make. It could be you telling your boss that you no longer need his services. These are or his job. That could be your why, and it's important for you guys to put that in there because it's going to help you with the morale. Okay, traders, the next area is your trade plan becomes your business plan. Very important. Okay, it must be put to paper, because if it's in paper, then it's tangible, something that you can see, something that you can hold yourself accountable. Okay, because if it's just a bunch of ideas and rules and mumbo jumbo inside your head, then you have nothing tangible, nothing that you can hold yourself accountable to, nothing that you can go to and say, yes, I broke this rule, or yes, I failed in this process. Okay, super important. It must be put to paper. I know that is that's probably the least I guess glorious, or the least fun part of what we do here, but it's that important. Trust me, if you don't have a trade plan put to paper, then you don't have a trade plan. Okay, you can lie to yourself all you want, but you have nothing to hold yourself accountable to. And what do you think that that's going to do to your trading state? Okay, it's going to affect it in a very, very bad way. Okay, your trade plan must be visible. Keep it on your desk. Keep it somewhere where you can see it as a constant reminder that that is your method of operation. That is the way that you are going to remain consistently profitable. Okay, you've tested this trade plan. You know it has a positive expectancy as long as you can follow those rules. By keeping that within sight, subconsciously your mind is processing that, is holding yourself, okay, in your trading state to a higher standard. Okay, something that you can now measure and weigh your performance against to see if you're on track, if you're off track, where you're off track. Okay, you may be able to do your analysis just fine. You may be able to enter your trade just fine, but your trade management sucks. Okay, by having that written down and having that process outlined, you're able to see where your shortcomings are, where your emotional demons lie. Okay, whether it's on the entry side, whether it's on the analysis side, or whether it's on the trade management side. Okay, all things that lead you towards where you need to put more emphasis on, where you need to put more energy on, which area of that trade plan do you need to build a stronger belief system in so that you can then follow your rules. Okay, very important to be able to do that. Okay, this will become important to your trading state. We've already talked about that. We already talked about this provides accountability to your trading discipline. Okay, and it will keep you profitable when you follow it. 100% it will. Okay, money management. Money management is another area that most traders overlook. They go with a simple, don't risk more than 3% of your account, or don't do this, or don't do that, or and all these things. They are money management strategies, but how effective is it? If you're not risking more than 3% of your account, how is that account going to grow? Okay, in a very, very slow way. Okay, is that your goal? Is your goal to have to take 80,000 trades to get your account to grow 15% because you don't want to risk more than 1 or 2%? Okay, it takes money to make money. No risk, no reward. Okay, but you also want to make sure that you know to what point you're over leveraging your account, and you also want a money management strategy that's efficient and that is dynamic. Okay, and that complements your overall strategy. Okay, there's aggressive on account building, and it's also equally aggressive towards account recovery. And that's why I like the smooth ratio, the fixed ratio money management system, because they're dynamic. They can be used to any strategy, and they rely more on performance based adjustments versus the actual strategy. It's a more diverse strategy and a more dynamic one as well. So it's the best of both worlds, in my own opinion. And as you can see, that we've been struggling with this 5K challenge account, and some people may even think that I'm over leveraging the account, but look at how long we've been trading, and look at how long we've been stuck in the mud. Look how many losses we've taken, and we're still very much in the fight, and doing fairly well considering the impacts that we've had, right? That's the power of the right money management formula that also fits your personality, because a money management strategy that's aggressive and you are a more fearful person, may have you falling off your trading state when you take a hit, and overwhelm you with fear, then that's no good either. So the money management strategy has to fit your overall personality, and it has to also fit your trading strategy here. Okay, and you need to have some goals from your money management strategy too. What is the goal? The goal is to keep building the account, aggressively, and recover in an aggressive way as well. So let me read through these, because those points are important, even though I've already spoken about them. So money management is a critical component to your business. It is a defensive concept. It keeps you in the business as long as possible. We're seeing that now with the 5K challenge, right? It helps you grow your business at a steady pace, okay? It also helps you maintain a positive trading state, because you know that the winners are not going to always be strong along, and that you could also string some losses by having a money management system that keeps you, in the game longer. Should also help with that emotional fear demon when you're taking on losses. Okay. How do I choose the best money management strategy is a question you guys have. Okay, there are many different ones. We talked about that. Okay, it has to fit your risk tolerance, right? Because if it's too aggressive and you can't handle that, you're going to have a fear-based response to it when you take some losses, and it's going to affect your being able to perform with that discipline moving forward. And it must complement your strategy, right? Not all money management formulas stack up evenly with your goals, with your account, with your strategy. So it has to be complementary to all those three things. Why is money management so important? Because the losses will come. You simply have to accept that. Okay, I know that we spend a lot of time trying to filter out pain, okay, but the pain is there. It will always be there. Okay, we must manage it, we must control it, okay, but we cannot let it control or manage us. Okay, so the money management is very important, because it's going to help, with those emotional components when we are not in sync with the market, when we're not taking on winners and winners and winners, and we're stacking losers. That pain is very real, and that money management strategy will help us. So to recap, money management, okay? It will help you absorb losses while controlling risk or exposure. Okay, it's important to understand that that's the purpose of money management. Okay, is to help you absorb losses while controlling risk or exposure by changing your position size accordingly. Okay, it helps you build your account or business at a steady pace. When you're winning, it should be more aggressive and should complement that winning streak. Okay, and that's the beauty of smooth ratio and fixed ratio money management, is that it achieves that. It's aggressive on both ends, and it helps maintain the emotions under control, or the emotions that will kill an account under control. Okay, it should help control that fear a little bit, and it provides the balance between your trade plan and your trading state. Okay, it's what helps you gain that mastery over those emotions. Okay, by creating that balance, that you need on your emotions to help you control that fear. So that's the importance of money management. And moving on to trading state. I only have one slide on this, because I'm going to focus more on the overall video that I'm going to make on this, because this is the most important part. But the trading state is not an option. Okay, your trading state is the most important part of your business. It is the area that most traders overlook and causes 99% of all failures in trading. Most systems and mentors never really do a good job at addressing or even including this in their programs, but it is the most important aspect in trading. Okay, the market is controlled by emotions, two of the most strongest emotions we possess. Okay, fear and greed, and it is very much alive in every single one of our trades. Okay, they're always there. Okay, but by being in control of your emotions, by having a positive trading state through the process of having a good strategy that you believe in because you thoroughly tested, by having a money management system is going to help you overcome adversity when you're stacking on losses. It's going to help you maintain, okay, the account heading in the right direction, ultimately heading in the right direction. Okay, so by keeping those two emotions under control, you're able to make rational trading decisions as opposed to irrational trading decisions based solely on those emotions. So in other words, we must gain or achieve mastery. Okay, we want to be Jedi Knights when we're trading. Okay, and the Jedi Knight is not the person that, you know, move the rock with the mind, or, you know, the lifesaver. It's the concept of being in touch with your emotions, understanding where they fit. Okay, understanding that they're always there, and then having the capability to oversee, okay, what is the proper course forward, as opposed to letting those emotions steer your course forward. Okay, very important component. I wanted to keep this presentation short and sweet. I wanted to keep it under 30 minutes because I want to dive deeper into these three pillars independently of each other. But I wanted you to see how all three fit together and why it is important to maintain a balance between all three. So thank you for your time. Thank you for this presentation. Again, I apologize for the background noise if you hear it. There's a bunch of kids in my house going crazy out there. But thank you very much. Again, listen to this 2 or 3 times. We're going to dive into each section independently. And it really is critical to your, you know, your development as a trader, to understand that trading at a high level, at a profitable level, at a professional level, or just if you just want to achieve some specific goals from trading, that if you don't, you know, use these three components together, these three pillars of trading, you don't embrace them as a whole, you're going to have a very difficult time, and chances are you probably won't succeed. Okay, I care enough about each and every single one of you to let you know this, to be transparent with you, and to let you know that this is what you need to be working on. Okay, yes, you need to work on your trade plan. Yes, you need to work on money management. Yes, you need to work on trading state. Okay, but you can't just work on one and forget the other two. It's a component of 3 things that make you the trader, that are going to make you the trader you want to be. Okay, so dig in, get to work, get it done. Every single one of you has the same capabilities and to get whatever you want out of trading. But it all starts with being set up properly, creating the right habits, and creating the right foundation so that you can sustain the hits that you're going to take. You're going to take hits, but you need to be able to fight through them and to live past them. And the only way you're going to do that is by using these 3 areas as the key building blocks to your trading development. All right, guys, thank you very much, and I hope you enjoyed this presentation. Please comment, like, and subscribe, and let everyone know that we're here and what we're trying to do here. And what we're trying to do here is simply, you know, get more people into the consistent profitability end of it, get more people to the promised land, and to put some of these snake oil people out of business. Help me achieve that by sharing this with everyone you know. Thank you, and goodbye.